R&B superstar Rihanna sued her accountants, claiming she was scammed out of millions of dollars. Let's go.
This is Pocket Watching with JT.
Hey, Pocket Watchers. I am certified financial planner Jayson Thornton, and this is the Scam Shakedown. This is where I react to the financial failures of your favorite celebrities and influencers so you can get the financial lesson without going through the trouble. Let's go, Pocket Watching. On this episode, I will be reacting to the multi-million-dollar lawsuit filed by R&B superstar Rihanna versus her accounting firm. But before I dig into the numbers, let's give this sister her flowers. Robin Rihanna Fenty, born February the 20th, 1988, was discovered at the age of 15 by a record producer. Then the very next year, at the age of 16, she auditioned in front of Jay-Z, hip-hop superstar and record executive at the time, that led to her immediate contract with Def Jam Records. Over her career, she has earned 9 Grammy Awards, 12 Billboard Music Awards, and even an Academy Award nomination. Then on top of all of that, she launches her own cosmetic brand, Fenty Beauty, that has been a huge success. So the question we have to ask ourselves is, how does she end up here? How does she end up on Pocket Watching with JT? Well, according to the paperwork, in the United States District Court, the Southern District of New York, Robin Fenty and Rihanna LLC filed a lawsuit against Berdon LLP, Michael Mitnick, and Peter Gunnis. Well, who are these people and what is this company? Well, defendant number one, Berdon LLP, is the accounting firm. Berdon LLP is said to be a prominent, high-profile New York accounting and business management firm. On their website, they advertise themselves as wealth preservation experts who help clients minimize taxes and maximize profits and grow their net worth. They established an entertainment and personal business management group that specifically targeted at artists, athletes, and high-earning entertainers who need touring and royalty audits. Now, this is very important. Auditing the music record company, making sure that you're actually getting the royalties that you are supposed to get, is extremely important in this industry. So it seems like this firm is tailor-made perfect for Rihanna. Who's the other people here? Well, we got defendant number 2, Michael. Michael is a partner at the firm. He is a certified public accountant, right? He is the leading person over the entertainment group of the firm. He held himself out as a top-tier expert in royalty investigations, contract analysis, and entertainment tax planning. Seems like the guy for the job. Next, we have defendant number 3, Peter. Peter was an employee of the firm, specifically the entertainment group. Starting in 2005, Michael assigned Peter to serve as the day-to-day manager, handling Rihanna's books, tracking accounts payable, monitoring the tour expenses, and communicating directly to Rihanna's personal team. So it seems like these are a good group of people. Seems like the type of men that you would want covering your butt, making sure that the numbers are where they should be. So how do we end up here? How do we end up in a courtroom in New York fighting over millions and millions of dollars? Well, when we take a look and we see that Rihanna is claiming that this group of very distinguished men mismanaged millions and millions of her money. She claims that millions of dollars of unearned commissions this firm took from her. She also claims it was a direct loss of $2 million from a luxury home that they suggested that she buy. Also, millions and millions of dollars in IRS interest, back taxes, and penalties, all caused by this firm. She's claiming breach of contract, professional negligence, breach of fiduciary duty, fraud and fraudulent omission, and unjust enrichment. Seems like a lot. But does Rihanna have the actual proof to claim that these great gentlemen would stoop down to the level of robbing from this woman? Let's take a look here. We have the scam timeline. Everything started around 2005, back when Rihanna was just 16 years old. Remember, she got that record deal from Jay-Z back when she was 16 years old for Def Jam Records. Now, she was introduced by her management team to this firm. This is supposed to be a prominent New York business management and accounting firm that should take care of all the numbers to make sure she gets every dime she deserves. So starting in April 8th, 2005, she signs the first engagement letter. Well, to be, more correct, her legal guardians signed the management agreement between her and the firm. Now remember, the partner, Michael, he's over the entertainment section, and he then appoints staff accountant Peter, who is not a CPA, but assigns him as the employee of the firm that is handling the day-to-day books for Rihanna. This same time, they establish a new company for her, Berdon LLC. This is the company that is going to run all of her touring business through. Okay. In 2006, she sets out for her very first tour where she is headlining, and it is under the supervision, right? All of the finances is under the supervision of this firm, right? Now, the issue here is that the tour operates with a very loose financial framework here, and it actually finishes with a loss. So when that tour, she really didn't make any money. She lost money on that tour. That seems to be a problem. But in March 13, 2007, she re-ups. She signs another engagement letter to keep them as her accountants, even though the first tour lost money. Maybe she's hoping the second tour will do much better. Let's take a look and see how that worked out for her. This is the Good Girl Gone Bad tour back in 2007. Now, this tour is a massive cultural success, but there's a problem. Even though it was culturally successful, it was profitable, but it was mostly profitable for the accounting firm, not so much Rihanna. Problem here is that this accounting firm had an unusual fee structure. They actually were paid based off the gross total of revenue that came in on the tour. That means they were making around 23% of the gross revenue of the tour, while Rihanna only got 6%. That seems a bit odd. I mean, Rihanna is the one out there singing and dancing. These guys are just counting the numbers in the back room. Not exactly sure why they get 23% and she only gets 6%. Now, also remember, they're getting paid off of the gross number, not the net. Gross is the total amount of money that comes in through sales. The net is the final number that you get to after you deduct all the expenses. Well, what's the problem with that? Well, the problem is if you pay a person based off of the gross and not the net, they really don't have any incentive to make sure that your expenses are in check, because it doesn't matter what your expenses are. They're going to get paid off of the gross. And that doesn't make sense when you're an accounting firm and you're supposed to be making sure that your client is maximizing their profits. Remember what they said? They help maximize your profits. This agreement isn't really set to maximize the profits. All right. Now, in 2008, there's allegations of sloppy record keeping. says that the firm failed to implement standard internal cash controls. Over the course of 2008 and 2009, the firm retained only about 2 to 4% of the receipts charged to Rihanna's personal credit cards. Hold on. Let's make sure I read that right. Yeah, it says 2 to 4% of the charges made to Rihanna's personal credit cards. That's all the paperwork they could find. All right. Complete accounting is abandoned for incomplete paper files. So when you have, I'm sure, hundreds of thousands of dollars worth of credit card charges, and you only keep about 2 to 4% of those receipts, it's kind of hard to explain where the money went. Now, here's an even bigger problem. The firm failed to claim tens of thousands of dollars in foreign tax credits withheld on international merchandising income. What does that mean? Let me give you guys a little intro of how that works. I do this in real life. So understand something. You can only be taxed once per entity level when dealing with the government. All right. What does that mean? That means you can only be taxed once on a federal level. You can only be taxed once on a state level. You can only be taxed once on a local level. Let me give you guys an example. My firm is based out of St. Louis, Missouri. I have many clients who may work in the state of Illinois, but live in St. Louis or vice versa. So what happens? That means they're earning money in one state, they live in another state. So what happens? Well, you have to pay tax on the money where you earn, but you also have to pay tax for the money where you live in a state. So what happens is we get a tax credit. So if you have to pay tax in a place where you don't live, your home state will give you a tax credit. So if your home state says you owe $10,000, but you already paid $8,000 on that same money to a foreign state, your home state will give you $8,000 credit and you only have to pay the two. The same thing works on the national level. If you pay tax in Canada, on the same income that you're being taxed on in America, America will then give you a tax credit for that tax that you paid the foreign country. So what is Rihanna and her lawyers claiming? They're claiming that this very prominent New York firm that claims that they're in the business of making sure that they minimize taxes and maximize profits, they're claiming that they just failed to file for the foreign tax credits, essentially claiming that she had to pay tax twice on the same money, which is an absolute no-no when you are a real tax advisor. We learned that probably within the first month of learning how to be a tax advisor. So that seems to be a problem. All right, what's next? We have from January the 25th, 2009. Now we have the Last Girl on Earth tour. So she goes out on this world tour, but once again, she's claiming that the firm failed to create a master budget, fails to establish spending ceilings, and fails to monitor the Rihanna LLC's daily cash burn rate. In March 9th of 2009, now they have the great idea that Rihanna should buy a multi-million-dollar home in LA, claiming that it is a good investment. All right, so you are an accountant, but you're also a real estate expert. Got it. All right. Says that, around 2009, March the 20th, they move forward and, start to try to close on this deal. But here's the problem. Rihanna re-ups, signs once again an agreement to have this firm oversee all of her finances, claiming once again that this is going to help her continue to maintain and grow her net worth. But the issue here is Michael, remember the CPA in charge of the entertainment division of the firm, he's claiming that, hey, man, Rihanna has all the money she needs to be able to pay for this Los Angeles home. All right, there's no problem. She's good to go. But what's the reality? Well, the deal is a $7.5 million home, right? Claiming that this appears to be a great value for this home. This is what Michael is saying. But around July the 31st, 2009, the problem is that when Rihanna then goes to purchase this home, they failed to tell her that the Turiana LLC is actually losing money. Okay. Also failed to let her know that her personal accounts have dropped from $11 million to $2 million. Okay. Remember, these are the guys, these are the guys she's hiring to manage her money. Her money dropped from 11 million to 2 million, and they're pushing her saying, go ahead and buy this $7.5 million LA home. Okay. When she then goes to buy this home, they immediately find out that the house isn't a good deal, that the house has many, many, many defects in it, has structural leaks, has mold and water damage, rendering the home uninhabitable, meaning she can't even move into this $7.5 million home. Eventually, it turns out that she has to sell the home, and she sells it at a $2 million loss. So I guess she bought it at 7.5 million and she sold it at 5.5 million. Once again, Michael, the CPA, claimed that this was a great deal. A great deal. Okay. We also have in February 1st, 2010, once again, Rihanna seems to sign up for their services again. All right, even though her cash reserves are virtually empty and these guys have been basically managing her finances her entire career, once again, she re-ups for another round. All right, now in mid 2010, she gets hit with the IRS audit. Yep. Sooner or later, the IRS is going to catch up with you. Now, based on sloppy reporting of domestic and international income, it triggers a multi-year IRS audit. Rihanna is forced to spend millions of dollars in back taxes, interest, and late filing penalties to correct the firm's errors. Now, see, that's some of the most basic stuff. If you can't even file the tax return on time, that's a red flag. Okay, that's a red flag. You can always file for an extension. It gets you 6 months more time, but to get hit with a late filing penalty when you're talking about multiples of millions of dollars, that's going to be a problem. All right, here's another problem. Towards the end of the tour, Peter and Michael continue to withhold the truth of how the tour is losing money. All right. These are Rihanna's financial managers who are not telling Rihanna's personal managers that the tour is losing money. It wasn't until September of 2010 when Rihanna's personal team informs the firm that, hey, listen, it looks like you're going broke. Your liquid cash is nearly all gone. We need to immediately terminate and fire this firm. That doesn't happen until September of 2010. Now, in between June of 2011 through December of 2011, Rihanna goes out on a new tour. She got to keep going. Has to keep it going. She goes out on the new tour. It's the Loud World Tour, but this time it's being managed by new finance guys. What happens this time? Well, applying strict budgeting and vendor controls, the Loud Tour operates with a net profit margin exceeding 40% of total tour revenue. That is a great profit margin, proving that Rihanna's business model was incredibly profitable when the books weren't being mismanaged. So, of course, in July of 2012, the lawsuit is filed. Now, July the 25th, 2012, the firm has to file their answer to the complaint. What does the firm claim is the issue? Well, the firm denied all of the claims. They did not take responsibility for mismanaging Rihanna's money. No, 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 no. See, they have the excuse. They say, listen, we did not mismanage Miss Rihanna's money. No, Rihanna's losses were based on her own issues. She was, spending money on lavish things, private jets, clothing, jewelry. It's not our fault. On top of that, she stopped her music career for a little bit and she wanted to become an actor. That's the reason why she lost so much money under us, even though when she went to the new firm, all of a sudden she's profitable. Couldn't be our fault, has to be her fault. Okay. But here's the issue. When Rihanna hires a financial expert to comb through the books to take a look at what this firm actually did, they discovered that they had 16 distinct professional problems, meaning there was 16 instances of how a normal financial professional would handle things and how they just completely departed from the normal standard operating procedures of any finance professional, right? They just pointed out that, hey, man, listen, look at what you did and what you did not do. See, you failed to develop a budget. That's like step number one. Why didn't you guys create budgets for her during this tour, right? Why did you fail to provide monthly cash reports? You didn't even tell the woman where the money was going, if she was making money, if she was losing money. You had predatory commission structures. It's like, why were you making more money on the tour than the client? That's a problem. You also claimed that you would audit her record label, UMG, to make sure that she was getting the royalties that she was supposed to get. You didn't even do that. You didn't do any of the things that you claimed you were going to do. Then you encouraged her to buy this $7.5 million LA home, and the home wasn't even inhabitable. She lost $2 million on your suggestion to buy the home. Seems to be a problem. Seems to be a big problem. In the face of all of that, we have Peter. Remember, Peter was the guy that was the personal day-to-day operations guy. Peter's defense was simple. Peter claimed, he said, hey, I'm just an employee of the firm. She shouldn't be suing me. I'm just an employee. On top of all of that, I'm not even a CPA. How could you hold me to the standards of a CPA when I'm not a CPA? You can sue the firm, but you can't sue me. I don't think the court didn't like that excuse whatsoever. Way before they can even get into the courtroom, right? Because obviously when you go into the courtroom, all of these things are, put on the front page. The firm decides to settle. Okay. They settled for a reported $10 million. Listen, it's very, very hard for you to claim that you did nothing wrong when you hand over $10 million to someone to make the lawsuit go away. Extremely hard. So Rihanna ends up getting the $10 million settlement based on all of the records. And then what does she do? Remember, this is around 2014. She gets the $10 million settlement, getting the money back that she should have had in the first place. And what does she do? Well, in 2017, she launches the cosmetic brand Fenty Beauty, which makes her a billionaire. All right. So great ending of the story for Rihanna, but I've got something for you guys. You may not be a multi-million-dollar R&B star. You may not own a billion-dollar cosmetic brand, but I can tell you right now, you have to be on top of your numbers. You cannot give your financial life over to someone and just hope and pray that everything works out. You have to take control of your financial life. And I'm offering you guys the opportunity to learn the PocketWatcher 7 money rules that will give you control over your financial life. What am I talking about? I'm talking about number one, budgeting. You have to create a budget. The very thing that this firm did not do for Rihanna. You have to create a budget to understand where your money is going. Direct your money where it needs to be so that you can accomplish your long-term goals. Number 2, emergency savings. See, Rihanna's team allowed her money to drop from $11 million to $2 million. Then all of a sudden things went bad. But if you have an emergency savings fund, when bad things happen in your life, you don't have to go into debt. You're able to go to your emergency savings fund. Debt planning. You have to make sure you have an active plan of how to get out of debt and stay out of debt. Insurance planning. If someone depends on your income, make sure that you have the right term life insurance. Make sure you have the right health insurance. Things need to be in place because obviously out of the blue sickness, a untimely death can destroy your family's wealth plan. Make sure you have the right insurance. Tax planning. Unlike Rihanna's accountants, you need to make sure you are following the tax rules so that you do not overpay on taxes. Wealth planning. You got to put money off to the side to make sure you are properly investing so you can build up a nest egg so that you can retire. And finally, number 7, estate planning. You have to have a plan for where all this wealth that you built up, where is it going to go when you are no longer here? Those are the 7 Pocket Watcher money rules. And if you need some help, just go to the website, PocketWatcher.net. You can sign up for the free Pocket Watcher app where you can learn more about the 7 Pocket Watcher money rules. You can also create your budget inside of the app. You can create your debt payoff plan right inside of the app. There's also video courses to help you take control of your financial life. And if you have a financial question for the Pocket Watcher, you've got some sort of money problem, some sort of tax problem, you can book a free phone consultation with me, the Pocket Watcher. Just go to the website, PocketWatcher.net. Click the free consultation button, sign up for a free consultation, and I'll do the best I can to give you some recommendations on what you need to do. And if there is a celebrity or an influencer who has been scammed out of millions of dollars, or maybe they scammed people out of millions of dollars, or if they filed for bankruptcy, make sure you put their name down in the comments of this video. And when I get time, I do the best I can to get you some content. Thanks for watching.
Are you looking for real financial advice? Thornton Financial is here to help. Certified financial planner Jayson Thornton specializes in tax and wealth planning. Are you living paycheck to paycheck with no retirement plan? Do you need help with the IRS? Book your free consultation with Thornton Financial today. Budgeting, savings, debt management, and retirement. Even tax debt settlements. Get the advice you need to live your best life. Book your free consultation appointment today. Go to www.thornton-financial.com.